All right, folks, welcome to the video. Anthony Special here with Hawkeye Traders. Super excited to bring you this intraday NASDAQ analysis, and it was so obvious and easy to be found by simply understanding the Hawkeye volume and price action methodology. Because at the end of the day, guys, I don't care what you put on your chart if understanding the volume and price action doesn't come first. All of the rest, I hate to say this, it's just extra, okay? Now, if that extra, quote unquote, serves a purpose for your trading, wonderful, wonderful. But more often than not, the extra that you apply to your chart will only work under certain conditions where volume and price action can give you an insight to what may potentially happen next in all conditions and within all time frames, okay? That's the uniqueness of volume and price action. It's always there, right? And when there is a relationship that occurs, which we'll teach you, right? I'm not going to just give you the indicators and say, well, good luck. No. I'm going to provide you with the Hawkeye Mastery Library so that you can understand when and where that relationship occurs that you could potentially profit from as long as you have a trade plan and a risk management plan designed to take advantage of it, right? Like, that's what we're here for. We all trade every day. Whether you're a day trader, a swing trader, position trader, it doesn't matter, all right? The fact of the matter, it doesn't matter, right? What matters is that you understand the relationship between volume and price action first, and anything that you add beyond that, as long as it serves a purpose, it's fine. But foundationally, look at my screen. What do you see? You see volume, you see price action. That's it. Because that's all I need. And that's all I care about. All right? So I want you to take a look here. This is the NASDAQ 100 futures. This is a 3-minute chart. So that means every candle represents 3 minutes of price action, or a 3-minute rotation, it's commonly called. And what you're seeing as far as the Hawkeye indicators go is you're seeing the paint bar, meaning the candles are being painted in relationship to the actual volume being traded within them. These purple or magenta bars are what we call our wide bars, and they play a super vital role. And that's what we're going to talk about today, in addition to the volume and price action, because it's really it's a puzzle that needs to be put together, okay? And when you understand it, it's no longer difficult, it becomes obvious, right? And that's the whole goal. On the bottom here, you can see we have Hawkeye volume, right? And we have our Hawkeye radar dots. So these radar dots tell us, in relationship to the prior bars, are we experiencing high volume, ultra high volume, or even ultra low volume, right? Because those could be indications of something about to transpire in the market. So I want to bring your attention to the opening bell here, okay? I'm going to just drop a line on here so that it's very obvious. In case you're having a little trouble seeing it, that is the opening bell. That's the U.S. Open. So it's 9:30 a.m. Eastern Standard Time, okay? So that's New York time, Eastern Seaboard time. And I want you to look at this very specifically, okay? Notice this is the highest volume traded so far in the Globex session from the prior night when it reopened, okay? Highest volume traded. We have a red volume radar dot, okay? So that means I need to pay attention. And we print a wide bar additionally. What does the wide bar have to do with this? Well, the wide bar tells me that there is greater than volatility compared to prior bars. It's warning me that something could transpire next. So I tell traders all the time, the best thing you could do is look left. Why? Because looking left, believe it or not, will provide you with quite a bit of insight, right? It's like looking at a roadmap. If I just look at one candle at a time, I don't get any knowledge, right? But if I look left, I go, okay, where did that prior high of the session occur? That's probably pretty meaningful, right? Where's the overnight high in relationship? Okay, so we got that high up there, mark that white, okay? And prior to that high, we had a little kind of awkward, I wouldn't call it necessarily a double top, but we also placed another high here. On our way up, we failed to kind of push through that. So that tells me that this area is pretty meaningful. All right, and I want to now take note, what happened at these prior highs? Well, I have a wide bar, which brings me to, hey, I should be paying attention. In fact, not only do I have a wide bar, I have something called a red top. What's a red top? Good question. I'll give you the answer. When a newly appointed high is placed on high selling volume, right? So it's red and it's made a new top, right? So it's called a red top. Pretty simple. So now I'm very focused here, now that I'm looking left and going, all right. So I created this red top, which typically is a very strong turning point, right? Or could be the high or low of a session if it's a green bottom. So I want to mark this out because this is pretty important to me. Highest candle printed thus far on ultra high selling volume at 8:15 in the morning. So I'm pretty interested in this candle, right? So I'm going to just mark that candle off, and I'm going to just zoom out and kind of run it here. And I'm really just, again, interested in that specific candle there. Okay? So I have ultra high selling volume with a red top at 8:15 a.m. Eastern Standard Time. I have a retest of that level at 8:30 a.m. Eastern Standard Time with another aggressive selling candle, right? It's not the top because we already have a red top, but you can see a wide bar with ultra high selling volume. So that tells me that this area is what? Supply or resistance. Right? Doesn't matter what you want to call it. Essentially, they both mean the same thing. So you can see that every time we come back into this area, we get some really aggressive selling. So that's something we need to make a mental note of, right? Because that's going to tell the story to create the thesis around what could transpire next. So market pushes down, reverses, and we end up back within that initial candle. This is the initial candle that I marked off that zone around, that wide bar right there, that red top, if you would. I'll even make the arrow red just so that, it reinforces. That is our red top. And if you see, that's the high for the session. Like, market's closed. I mean, we're starting the Globex session, of the following day. But that is, in fact, the high for the session. So just keep that in mind. When these red tops and green bottoms transpire, sometimes they create massive, massive opportunities. Now, I believe I have resistance. I found a red top. That area's been previously respected. That's all meaningful to me, okay? I've made a lower low. Okay? I have a low here, and I've made a lower low here. So I have a high and a higher high, but I've also broken all these prior lows. Okay? And this can look a couple different ways, but if I pull it through this way, same thing, that's kind of our walk higher, right? And at the same token, this is our walk lower. So we have a high and a newly appointed lower low. What does that tell me? Well, it tells me that the red top is pretty meaningful, okay? And if we push back into it, I need now to see some piece of evidence that would lead me to believe that the market may not be able to continue any higher. Well, guess what we get at 9:30 a.m. Eastern Standard Time, okay? We get the opening bell, right? We get the highest volume printed, I believe, the entire session, right? Am I wrong? Oh, we got some here at the closing bell, but yeah, I would call that the high. I mean, it's certainly the highest to our point where we're currently analyzing the market, and just about as high as the closing bell. I want you to notice something very specific. We print another wide bar, which brings our attention to it. This candle actually closes higher than it opens on the strongest buying volume printed throughout the entire Globex session. But what happens? We place a lower high, right? We come in here and end up placing a lower high. We're unsuccessful in breaking this wick or this candle. So if we have the strongest buying in a 3-minute rotation throughout the entire session, shouldn't we be making a new high? Shouldn't we be advancing, right, beyond any resistance? But we're not. So what does that tell me? That tells me that if we're unsuccessful in closing above the wick of this candle, okay, this candle right here that came in hot, and I'm talking about hot, highest volume printed in the session so far. If we cannot close above that, the wick of that candle, guess what? The buyers got absorbed. They lost any momentum and strength that they had. And they're going to roll back over and make what? We've made a lower high. Well, what do you suspect will happen next? Perhaps a lower low. Right? I mean, beautiful 10 a.m. reversal here, okay? But that's all fine and well. But from here, we could at the very least expect a push back into this low. Potential double bottom, that always exists, right? But since we've made a lower high, we should make a lower low. So from the this candle here, right? From this area here that we kept kind of dancing along to that prior low gives me 215 ticks on the NASDAQ 100 at $5 a tick per contract traded. But I know that in theory, I've identified a red top, I've identified a lower high with ultra high buying volume and zero follow through. I have a prior low. I should be looking for a lower low. And that lower low went on to produce about 315 ticks, okay? So it gave us almost another 100 ticks beyond just retesting the prior low. Now, did we reverse off of it? We sure did. Guess what happens next? Well, what if I just extended this trend line, right, and put it right back to where I had it before? Oh, how convenient. We pushed back into the same resistance or supply zone. We had all buying volume as we pushed in here. We had no follow through. We retested this trend line off the highs, and what happened? The market went on to sell off, right? We didn't necessarily break this low at the time. You can see we came very close to it. The market pushed back up, made another lower high, and eventually we went on to make a lower low. Where did all of this stem from? The red top that occurred at 8:15, followed by the failed ultra high buying volume on the opening bell that was unable to overtake the red top. All you have to do is put the pieces of the puzzle together in order to say, hey, I think we can put together an idea here that may come to fruition. Right? Now, just so I'm clear, I was watching the NASDAQ on a 3-minute chart this morning as this was transpiring. Okay? So none of this is unfamiliar to me because I watched it all as it happened. And in fact, we talked all the way through it in front of live traders trading live money. Now, whether they chose to act on this or any of this met their particular trade plan, that's ultimately up to them. But this is not some hindsight, kind of pick it out of the sky. This is real deal stuff that was analyzed, interpreted, and had expectations provided for it in real time. So that gives us the opportunity to say, there's some validity to understanding the relationship between volume and price action, identifying red tops and green bottoms, identifying high buying volume into an area of supply with complete failure. And you really set yourself up today for some really, really great opportunities, I think. Okay? Couple hundred ticks on the NASDAQ is legit, guys. I mean, we're talking about a lot of money. So I want to bring this to your attention because these are the things you should be looking at. All right? You can populate all the stuff you want on your chart. What do I recommend coming to your chart with? You can have a reference chart, okay? The chart you trade on, the chart I trade on, looks like this. Why? Because that's all I genuinely need. Now, if I have other things that I like to reference, that's fine. I put it on another chart. Why? Again, it just creates clutter. Creates confusion. Makes it difficult for me to see exactly what's happening when, where, and why. But when I have the volume in the price action, I can just draw my analysis so that I see it visually. So when I go, okay, we got ultra high buying volume here, within a red top, in a supply area, we may have a hard time. What's my risk? I mean, what's my risk? Close of this candle's here. I mean, the top there is what, 20, 25 ticks? For, over 300? Over 200 just to the prior low. So I want you guys to evaluate the way you're approaching the market. Whether it's day trading, swing trading, position trading, whether it's stocks, futures, forex, cryptocurrencies. And if volume and price action is not the forefront of the way you analyze the market, I encourage you to take a step back. Go below this video. There are some links. I want you to click on them. I'd like you to consume the content. I'd like you to reach out to myself or my Hawkeye Concierge team so that we can better help you understand that without this foundational piece, everything else you add is just muddling the water. We want a clear, clean, concise vision of what's happening, when, where, and why, between the relationship of volume and price action. And when we have those things, it just makes the analysis process so much easier. And when you're confident in your analysis, you become confident in your trade plan, right? You can't have a wishy-washy trade plan, or you can't have a wishy-washy psychological approach or emotional approach to the market. So each of those pieces need to play a role. But if you understand the relationship between volume and price action, it will help give you confidence in the technical component of trading and analyzing the market. So with that being said, again, I ask of you below this video, there's some links. Please click on them. Please consume the content. Please reach out to myself, my Hawkeye Concierge team. We will answer your questions, okay? Because if this is right for you, we want you to put it in your toolbox, because we believe firmly that without this, everything else is noise, okay? Everything else is noise. But the only thing that's consistent on all time frames and all assets is volume and price action. All right? And if you enjoyed this video, if you learned something from it, please like it. Feel free to leave a comment below. I will personally respond to it. All right? And if you haven't subscribed to the channel yet, please do so you don't miss the next educational video. All right, guys, I appreciate each and every one of you. Thank you so much for being here, and I hope you enjoyed. I will see you in the next video. God bless, and have a beautiful day.